validation, now I validate myself. Building inner strength, putting doubt up on the shelf. No more unnecessary drama, no more wasted time. Climbing higher constantly, making my own climb. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. Whoa. I'm not just living, I'm manifesting my vision. Cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield. I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. I'm not just living, I'm manifesting my vision. Cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield.
How you doing, ladies and gentlemen? Welcome to This and That. I'm your host, Xander, where we're talking about this, that, and everything in between. It looks like they have changed a lot of stuff on StreamYard here. We had a different style rocking, and then we ended up with what we got today. I'm like, what is this? Oh my God. And now they got it blue. Oh, they're tripping. Oh Lord. Oh Lord. How y'all gonna see what's going on? All right. Oh boy. Oh boy. See, I tell y'all, like there's upgrades happening on a regular basis, and I gotta take a look at them upgrades and be like, what's happening here? And get adjusted. Now make sure that y'all like and subscribe. Actually, I think the words were more visible in black. I don't know. Y'all let me know. Tell me what you want. I don't know. Look, now I gotta adjust my time. I'm sitting over here all toe up today. Look, so today we got Tuesday going. And yeah, actually, no, I think that a little bit darker, a little bit more darker. There it is. All right. Close. close. I can't get it to match the background. There's too many colors back there with all the books. I'll figure it out and have it looking better. Matter of fact, I'll just let it run black today, and then we'll figure it out and have it run better tomorrow. Because it was supposed to have like, yeah, Jesus Christ, look at the block, the bubble. Oh my God. Show headlines. There we go. What? The headlines ain't even right no more. Oh Lord. Lord have mercy. All right, let's see what we're gonna do with these headlines. Yeah, then all right, we just gonna have to do it like that. There we go. Yeah, we're gonna have to do it like that. Get a little bit of color up there. I don't know what's going on. They'd have changed everything up on us. There it is. That's what we're used to. All right. Now we can go back to knocking it out the way we was knocking it out. I was trying to figure out what the hell did they do to the whole thing changed up on us. I was just lost for a moment. All right. I apologize. So now look, welcome to the show. Thank you guys for coming to This and That. As I tell you every day, I'm your host Xander, where we're talking about this, that, and everything in between. Today we're going to be talking about some of the hottest growth stocks to buy in April. I know we're coming towards the end of April, but we're going to be talking about what we're going to do in April, and then the next time we hit these stocks, we're going to be talking about what we're going to be aiming for in May. So you all know that this is going to be a big shift, because we're waiting on them to buy out TikTok. We know that they got until June 20th. There's a strong possibility that the sale will happen by June 20th. And as soon as that sale happens, you all know that we're going to have some changes in the stock market yet again. So while we're in the dip, I told you guys that we were going to be talking about different things that we can invest in right now during the dip. I actually found out one specifically that actually isn't impacted by the dip. Well, yeah, it is a little bit, just not the tariffs. So we're going to be talking about that one as well. Now, moving forward, make sure that you guys stay tuned, because we got some stuff good for you guys tomorrow. We're going to be doing a lot of things on Thursday and Friday, giving you guys some more information, tips, and tricks, and empowerments to make yourselves better use. So we're going to be enjoying that in due time. Now, I know Bayside's going to be here in just a moment. I know Mr. Satellite's going to be here in just a moment. These guys are dedicated to the cause. Ruderus is smacking me down in chat, so I'm waiting to see him pop in tonight as well. We're going to be tiptoeing around a lot of the guys as they pop in, give them a little bit of a intro with the This and That theme songs from the exclusive soundtrack, and then we'll keep it pushing. Now, special shout out to those of you that's watching us on Twitch, the rest of you that's watching us on Twitter X, and then we'll figure something out after we recognize that TikTok has actually been bought out by the US. And then we may even stream to TikTok, and you will see an abundance of individuals on TikTok. So until we get there, we're going to be dealing with some of this stuff here. See, one of the things that I noticed about TikTok is that after you go live, your show isn't still up there. You still got to post it. You still got to post it after the fact, which requires you to do shorts and stuff to that effect. I know I had a guy that was reaching out to me. He wanted to meet me on, I guess, Zoom or something like that, or Skype or something like that, and connect with a business plan to do some of the SEOs. And I was sitting over there like, man, I am not about to invest in that right now, because while it is a way to trigger the algorithm to get more traffic to the platform, typically you'll have 1,500 to 2,000 people swing by the show for less than 60 seconds and stroll on. And while, yeah, that could potentially get the viewer count up a little bit, it's not actually going to really help the platform in and of itself with the click-through ratings and stuff to that effect. So I'll probably touch base with him later today, and then hit him with some of the criteria for an SEO specialist, so that he understands what I'm expecting from him. And then once we finish talking about it, then we'll know what we're doing. because me myself, I feel like if I'm not making money off of the situation, I'm not going to do it. So it's one thing to say, hey, boost my channel, but it's another thing to say, hey, if you're going to boost my channel where I'm gonna make some profits. I'm not a big fan of the bot thing, so I definitely don't want to take part in that. So I'm going to be trying to make sure that I'm not involved in anything like that. But when you're dealing with advertisements, you got to see what the advertisers are trying to advertise, because you can't do it by yourself. Some things you can, but in order for you to expand beyond your capabilities, you need more people on the team. Now, it's fine to have more people on the team when the people on the team are generating revenue. It is not fine to have people on the team that are costing you more money where you don't have enough revenue. That's a big problem. So we're going to be analyzing that coming soon. I'll probably touch base with them on Thursday and then let them know my position. And we'll discuss the ins and outs of that situation, and then we'll move on. Like I talked to you guys before, I'm supposed to be trying to get myself together to try to work through the Fit Chef recipes. So we're going to be promoting those coming soon. So I have to grab some of the stuff that I need to take care of that and take a deeper look at these recipes. So I'll probably try to get started with that situation on Thursday. So I'll probably start acquiring stuff tomorrow, Wednesday, so that it'll be here for Thursday, so that I can start trying to see what I can do with it come Thursday evening. Try to get some enhanced recordings of some stuff. But I know I do have quite a few other things that I want to knock out first. So as soon as I finish getting everything organized, if not this week, definitely next week, I'll be putting it together. And then you'll start seeing those cooking videos. I have not heard from Dina yet, but I'm going to reach out to Dina, and we're going to be seeing what's going on with that as well. So, because I know some of you were waiting on it. So the Vino Cocktail wine will be running that coming soon. Well, we'll try, because the payment option was a difficult scenario. So I'll test that theory out again sometime this week. And then after that, we will move on to some other scenarios. So make sure that you guys like and subscribe, because we got a lot of things happening. We got a lot of things going. There is a upswing and a downswing to every investment that you have. So you want to make sure that you stay on the upswings. Buy in when things are down, and if you're going to sell when things are high. That way you're turning a profit. Tomorrow, Wednesday, we're going to be talking about a new country. I haven't figured out which one yet, but I'm going to be throwing up at least one, if not two, tomorrow, because we've covered quite a few countries. I want to make sure that I don't cover the same country twice. I think with enough countries around the world that there's a strong possibility that I could cover 2 or 3 countries a day, once a week, for a couple years and not cover the same country twice, unless I'm doing a follow-up on the country because of new developments. So just to make sure that I get everybody, I want to at least get everybody on the top list. So speaking of top list, special shout out to Vietnam, because Vietnam has been one of the dominant followers of the show this past week. So I really appreciate that. That's a huge thing. Russia and Vietnam has been taking turns with watching us a lot recently. So we really appreciate you guys over in Vietnam and Russia, Germany, Mexico, Philippines, Ukraine. Special shout out to Brazil, Romania, Red Void, and Omni 81. Really appreciate you for coming to the show. I see you popping in. Now let's go ahead and take our attention towards this really, really interesting ride we have here. Oh, bless it. 72 pages. All right. Let's get to it. We're going to ride this wave of the market and hunt for the next big winners. So I want you guys to join me as I dive headfirst into the fast-paced world of stocks, where we're going to take on a challenge of uncovering the hottest growth stocks to buy in April, even though we're towards the back end of April. Now, April is shaping up to be a pivotal month for growth investors, with the market bouncing back from recent volatility, like the Dow's dramatic 1,000 point surge and tech stocks regaining momentum. Opportunities are emerging for those who know where to look. But in a climate shaped by shifting tariffs, AI breakthroughs, and every changing economic signals that we can find, picking the right growth stocks is more than just a numbers game. It is a real test of insight and strategies. So the stakes couldn't be higher. The risk of trying to pick the right one could mean outsized gains, while a misstep could set you back by a lot. Whether you're a cautious, savvy saver, or a aggressive, extremely savvy trader, or just a bold growth seeker, this month is packed with opportunities to grow your wealth and strengthen your financial future. So the market is buzzing with activities that most of us have not paid attention to. And the smartest investors are those who know how to spot the right openings and then act decisively. That's why I'm digging deep, analyzing financials, tracking industry trends, and scrutinizing what really drives stock performance. It's about more than just flashy headlines or hype. It's about finding companies with rock solid fundamentals and a clear path to sustained growth. In this whirlwind market, a smart investor needs a game plan. So you got to set a clear goal, diversifies wisely, and stay nimble as conditions evolve. So whether it's a tech innovator shaking up AI, a biotech firm on the verge of a breakthrough, or a renewable energy pioneer riding the green wave, I'll spot the names, turning headlines and moving markets. Now, if you're looking for safety and flexibility, now's the perfect time to leverage high yield accounts. You can utilize savings accounts, but you're going to find that there are some checking accounts and money market accounts that are incentive based that have higher interest yields for up to the first $500 in most situations. And we've talked about those before. That is like the safest way that you can acquire extra cash and manage your accounts while having the liquidity for an emergency fund. Now, these options offer attractive interest rates where FDIC insurance and the kind of liquidity that lets you move quickly when your opportunities knocks. But I understand that the interest rates for those types of accounts are not nearly as lucrative as other options. So for those who want predictable returns, you guys can get into certificates of deposits. They're called CDs, and money market accounts that provide stability and peace of mind, while U.S. Treasury bills, as we've talked about in the past, remain the gold standard for risk-free investments. But if you're willing to take on a bit more risk for higher returns, you have private credit and peer-to-peer lending that could be your ticket to yield in the 5 to 15% range. So just remember, higher rewards come with higher risks. So through research and due diligence, you are going to be able to find the best way to tackle these particular situations. Now, for investors with an appetite for excitement and the potential for outsized gains, the stock market is where the action is outside of Bitcoin. Stocks are leading the charge in April of 2025 with companies like Regencell, Bioscience Holdings. Let me give you all these names now because I told y'all before. These are some of the places that y'all need to go and stick your nose into, go see what they got going on. So you got Regencell Holdings, Park High Biological Technology. And as y'all see him, if y'all are watching us from the YouTube channel, you'll see I'm giving you guys the names in the comment section. And this show does replay the comment section live on the replay. So you will be able to see these in real time as I'm stating them. So Radius Recycling, that's another one that's doing really well right now. And Jaidu Global Logistics. These are some. Oh wait, we got one more here, guys. We got one more here. Ava Technologies. So these are some of the ones that have kind of done a little something, delivering eye-popping returns in the last like 60 days. But these aren't just lucky breaks. These are companies with strong fundamentals, innovation, and very strong business models with a clear vision for the future. Now, we have top analysts that are also backing some heavyweight companies, such as Salesforce. You can find Salesforce in some of your portfolios. If you guys don't have these, you need to go grab them. You have, I know you have heard of Intuit. You see this one with your laptops and your computer programs, Adobe and Autodesk. These are proven performers with resilience to wealth market storms and agility to capitalize on the new trends. And let's not forget Credo Technologies. This is another one that's going to be good for you guys. You guys will be able to see these popping up as a rising star at intersection of AI and tech infrastructure, which is poised for rapid growth in the upcoming months since Donald Trump put up that executive order pushing for exactly that. Now, if you value stability but still want exposure to growth, you have some blue chip stocks and established companies that have recently dipped and could offer a perfect entry point. Now, these are the bedrock of any well-diversified portfolio. So smart investors know that diversification is the secret sauce for long-term success. Now, we understand that gold, which has soared nearly 40% in recent times, over the past 12 months, as a matter of fact, reigns a powerful hedge against the volatility. And you can gain exposure through ETFs, mutual funds, or gold stocks as well, letting you ride the wave without the hassle of physical storage. Bond funds and money market funds are also shining this month, offering steady income and low risks, where they're an excellent choice for those seeking balance and buffering against the stock market swings. Now, the key to making the most of these opportunities is matching your investments to your risk tolerance, the time horizon, and liquidity needed. Because if you don't have enough money to invest in this particular endeavor, or if the endeavor is going to take too long to blossom for you, then you're not going to see the diversification that you're looking for at a satisfactory pace. Now, you want to be able to diversify your holdings, stay informed, and above all, be ready to adapt, because the only constant in the market is change. So we have growth stocks that are particularly exciting right now, and companies like Plantar, which is why I told you so, because Plantar Technologies was one of the ones that we talked about before, and Sezzle and Amada Biologies, Biologics is what they're calling them. Here we go. Take those. There they are. Planetar Technology, Sezzle, and Adma Biologics. There it is. I had to figure it out. These and others are delivering phenomenal returns for investors who can spot the trend early. So whether you're eyeing high growth tech, biotech, breakthroughs, or green energy innovators, this is your moment to get in on the action for those particular stocks. Now, are you ready to discover which growth stocks could define this month's markup? My top picks for April 2025. We're going to start off with the undervalued growth stocks to watch. North Point. You guys are going to be sitting over here wondering what's going on when I tell you I told you so. I'm trying to tell you I told you so. North Point, currently $13.13. Their estimated fair value is supposed to be $24.76. So this is a good time to get in there. You are having a 47% discount on the fair value price. The growth look is going to be the net income surging from $33.76 million in 2023 to $55.16 million in 2024, where analysts forecast a 33% annual profit increase over the next 3 years, well above U.S. market average of 8.2%, where the revenue growth is also set to outpace the broader market. As we expected, I told you guys he was coming. We're throwing down. The 8th time. As you pop in, make sure that you guys like and then start mashing those reaction buttons. He's dancing on top of the Haumia. He's picking a different solar system every time. Countries are back for round 4. Oh, you know, everybody's going to come back for round 4. They're going to, once they've seen how good we were in round 1, they're like, ah, yes. All right, now let's get back to work. Now, nvidia is number 2 on the list. I wanted to give you guys nvidia as well as giving you guys North Point. And then we're going to shout out because my boy, I told you they was coming. There goes Bayside. Bayside's in the house now. Bayside said, splash, belly flop in Lake Tahoe. What up, fellas? It's good to see both of you guys. We started walking through the list, so I'm glad to see that you guys are here. It's a pretty decent sized list. Taking notes. Good evening, Xander. Oh, I'm glad that you're here, and I hope that you learn as much as you can from this one. And good to see you again, Satellite. Special shout out. Now, we were talking about number 2. It was nvidia. Nvidia is trading at 26.8 times forward earnings, where they're considered attractive for its sector. They're despite a 19% pullback from January's highs, NVIDIA's data center revenue grew 93% year over year in Q4, and CEO Jensen Huang projects $1 trillion in data center revenue by 2028, which is 3 years from now. And analysts see about 50% upside from current levels, with long-term profits projections suggesting even greater potential than what was already projected. So you guys will see that as well. Target. Yeah, Target. We're talking about undervalued stocks that you can bid in right now. Target is one of them. Apparently, down 60% from an all-time high, trades at 11.8 times earnings with a 4% dividend yield, and investing in new stores and digital sales allows Target's forecast to be $15 billion in additional retail sales over 5 years, where analysts see nearly 30% upside as the company recovers from recent challenges. Hims and Hers Health. That's another one that you guys can invest in. This one is actually pretty interesting. Hims and Hers Health. This is a telehealth and health sector. So it's going to have a strong growth potential in the expanding telehealth market, with the stock considered undervalued relative to its future prospects. TG Therapeutics. This is another one. So if any of you guys ever need some therapeutic non-happy ending treatment, TG Therapeutics is another place that you could put your capital here. Biotechnology sector, where they're going to occupy a niche with an FDA approved product and robust earnings growth, yet still trades at a discount compared to peers. Now you have Super Microcomputer. This is another one that you guys can take a look at, where the revenue is 20.44%. Earnings growth is 29.79%, and it has a 6-star growth rating. The high growth rates and strong innovation potential, but valuation remains attractive compared to other tech leaders. We have Travere Therapeutics is another one. So this is the 7th one on the list, is Travere Therapeutics. Their revenue growth is 28.43%, with earnings growth of 65.01%, where they also have a 6-star growth rating. Biotechnology sector with high growth, but not fully priced in by the market. Now we have some other noteworthy undervalued growth stocks. First one up is going to be Bancorp. They're trading at $37.05 with a fair value estimate of $66.09, offering a sustainable discount and strong cash flow. Transmedics Group. That's going to be another one that's good for you guys. They're medical technology innovators with potential to surpass previous highs as demand for organ care systems rises. So if you were ever thinking about that Repo Man movie and turning that into a legitimate business, probably want to start thinking about that coming soon. Grab Holdings. This is a Southeast Asian lending group for super app with a vast market opportunity, still trading below intrinsic value. You have Allium Pharmaceuticals. Shit, that almost sounded like some Gotham City stuff right there. Allium Pharmaceuticals. Okay. Their earnings growth of 58.81%, revenue growth of 22.96%, and a strong innovation pipeline. Now you have Super Micro Computers is another company that you guys can get yourselves involved in, where this computer remains a standout in the AI hardware space for the fiscal 2025 year, where sales are projected to soar 59% to 23.79 billion, up from 14.94 billion last year. Damn. And the stock is up 3% year to date, which outperforming the NASDAQ drop of 15% and has gained over 700% in the last 3 years, far exceeding nvidia's 266% over the same period. See, now we're comparing the stocks. So this one, I told you guys about nvidia earlier, and now Super Microcomputer, I said Super Mario, Super Microcomputer is out trading nvidia. The SMCI trades at an attractive 12.7 times forward earnings, below both the S&P 500 and peers like nvidia, making it a compelling value in the tech sector. It continued expansion in AI position has put it at the top of the growth pick at a reasonable valuation. Now let's see. I believe we have already stuck our big toe into TG Therapeutics. Nope, that was Travers Therapeutics. So TG Therapeutics is another one. So you got to double check when you're looking at these stocks because they've got some similar names. TG Therapeutics is a biotech focused on treatments for autoimmune disease and cancer, and has seen bullish sentiment, but faces near-term volatility. So right when it's about to mature, that's when the stock market goes crazy, because a lot of people are selling right before the maturity date. A lot of people are buying in right before the maturity date. So the stock is currently trading above some technical forecasts, with a projected short-term pullback to around $34.37 by May of 2025 from the original $38.27. Despite recent gains, the fear and greed index signals caution, and some analysts believe the stock may be overvalued in the short run. Still, TGTX has delivered strong returns over the past year and maintains positivity over a long-term perspective. So let's see, we've already covered them. Arcutis, how do you pronounce that? Arcutis Biotherapeutics. That's another one. That's a wild one. This one focuses on innovative dermatology treatments. So if you're trying to improve your skincare, and his dermatologist is trading at $13.01 as of April of 2025. The stock has been in a downturn since 2020, with short-term forecasts suggesting a range between $11.67, which is less than 13, and $14.77 through May and June. While the price is relatively stable, the company has yet to break out of its multi-year decline, and investors may want to watch for a reversal or positive catalyst before considering entry. Now, Acclaim Technology, we seem to be getting through this list pretty quickly. Acclaim Technology is a provider of cloud-based digital banking solutions, which is announcing a Q1 in 2025 result on April 30th. So that is in 8 days. The company continues to expand its presence in the fintech sector. Special shout out to Fintech 101. and upcoming earnings will be a key indicator of its growth trajectory. Investors can tune into earnings, call for insights into Alchemy's performance and outlook. Now, that's the one that looks like Gotham. We've already covered that one, but they're giving us more information. Like the stock has recently saw a 6% gain over the past 2 days. Oh, so that's a special bulletin. Oh, okay. Anyway, Lumentum Holdings, Lumpton Holdings, I guess Lamentum Holdings. We're gonna work on pronouncing these names now because this is unrehearsed. Lamentum Holdings, a key player in phonic and optical components. So this is going to be vision stuff, and it has experienced recent stock price pressure where it was down 14.28% over 2 days, even as trading volume surged, and the company reported a 15% year-over-year revenue increase and a 25% net income growth in Q1 of 2025, where Lamentum is acquiring Coherent.com for $5.7 billion, which is a expected bolstering move to the market position that they have through some analysts and cautious investors that are going to be integrating their risks in increased debt. Broadcom Incorporated, I don't know why they're calling themselves Avocado, but okay. Broadcom Incorporated is another one where they're posting their Q1 2025 revenue of $19 billion, up 25% year over year, with an AI revenue surge of 77% to $4.1 billion, beating expectations. Adjusted EBITDA was $10.1 billion, which is up from 41%, and operating margins reaching 66%. So AI custom chip demand, integration of VMware, and strong infrastructure software sales are propelling growth, where the company is expanded its hyperscale to customer bases for AI acceleration. Now, most analysts have raised their price targets, with some projecting a 30 to 35% upside to $260 to $275 per share. For the average person that's trying to get a lot of capital back, that's not a lot of money. That's a lot of money to invest on a share with very little return coming back. But for those individuals that want to see those massive increases in the value of the share, picking that up would be a good way to go. Now, the consensus is that Broadcom's AI-driven uptrend will continue, potentially reaching new all-time highs before mid-year, where Broadcom is viewed as a top AI infrastructure play with robust cash flow, shareholder returns, and a favorable growth outlook. Now, Tesla Incorporated, got to talk about them because Doge, and I call them Dodge, but Doge. Tesla reported in Q1 of 2025 revenue of $19.34 billion, missing analyst expectations and down 9% year over year. I would not expect anything less, since he fired 200 and something thousand American workers out of the US government. Pretty sure a lot of people would be very pissed off at him. People show how they feel about you by moving their money away from you when they're rich. When they're poor, they just talk trash about you. But when they're rich, they take their money back out of your pocket. That's how rich people communicate. We're not enemies. I'm just not going to let you hold my money no more. Right? You change the way you do things, and I'll reinvest in you. That's how that. I don't understand why we didn't think about this a long time ago. Now, adjusted EPS was 20 cents and also below expectations, where net income fell 71% year over year to million, largely due to the significant drop in vehicle deliveries. Because I mean, they were supposed to be putting out a significant quantity of Cybertrucks, and they're only putting out like 6,000 a year, roughly. And it's the lowest since Q2 of 2022. Now, some of the challenges they're experiencing is lower deliveries, price reductions, and margin pressures, because who the fuck's going to pay $130,000 for a truck that they know doesn't live up to its reputation? A lot of people who bought it out the gate were buying it with the assumption that it was going to live up to its standards, but it did not. Now, Tesla shares of the EV market has also slipped, and global competition is intensifying. You know who I forgot to put up here? I was just talking to you guys yesterday about Volkswagen going electric. I'm going to have to throw that into our next discussion about solar vehicles or electric cars. But Tesla, the company, is delaying updated full year guidance until next quarter because they don't want to piss off the shareholders. Now, the consensus 1 year median price target is $296.66, which is 22.4% upside with a 39 analyst rating, and it is going to be a hold recommendation. So 39 analysts say hold it. If you bought it, hold it. And this is also going to be 24/7 Wall Street, which is more bullish at a $360 scenario, which is 48.5% upside and based on long-term growth in EVs, energy, and AI autonomous driving. So Tesla faces near-term headwinds, but retains long-term growth potential if it can execute on new models, cost control, and AI autonomy initiatives. Now, I didn't throw Tesla in the comment section. I should. I need to be fair and throw Tesla in the comment section. As I throw Tesla in the comment section, Illy, Lilly, and Co. is the next one to look at. Don't want Elon to feel left out. They had a stand-in for Elon in the Kill Ted comedy show. They had a guy that did a very good Donald Trump as well. I thought that was pretty, and they had one that did a very good Joe Biden. So if you want to look at that on Netflix, they have a pretty interesting segment. Back to it. Eli Lilly and Co. LLY is expected to report their 2025 revenue for Q1 at $7.2 billion, up from $6.8 billion a year ago for fiscal year 1 in 2025, where analysts forecast the adjusted ESP or EPS of $23.21, up 79%, and revenue of $58 to $61 billion. Blockbuster drugs, Monwana. Okay. I had to look at that twice. Yeah. This is another company slip right through. I'm like, what? Blockbuster drugs. It's a true company for diabetes and obesity, and Zepbound, which is for Alzheimer's. They are driving strong sales with robust pipeline in cardio, metabolic, oncology, and immunology. Why can I say those, but I couldn't say the other ones? Strategic acquisitions and R&D investments are fueling future growth there, where the consensus 1 year price target is $1,006.09, which is 22.4% upside, with most analysts rating it a buy scenario. 24/7 Wall Street sets a target of $1,140 for 2025 with continued upsides through 2030. So back to Eli Lilly. This is a biotech leader with the strong earnings momentum and a deep pipeline and positive analyst sentiment, making it a top pick in the healthcare area. Now, I believe we have already covered the Plantar Technologies, but I just want to make sure that you guys know, in case you're just popping in, that Plantar's technology is significantly on the list. Their revenue grew 36% year over year with $828 million. The company had posted 6 consecutive EPS beats and is guiding to 31% revenue growth for 2025, targeting $3.75 billion for the year. Now, it's a high demand for Plantar's AI platform with AIP, Foundry, Gotham, and Apollo, especially from government and commercial clients, where strategic partners in space tech and AI are expanding addressable markets. The consensus 1-year price target is going to be $39.69, about 2% upside, with a hold rating from most analysts, and 24/7 Wall Street projection of $120, which is 31% upside for 2025, and $192 by 2030, which is 110 upside. I believe, yeah, that's 192. Yeah. And based on robust government contracts and commercial growth, that's going to be one of the things that you guys should look into. Now, I just want y'all to know that I get my stock recommendations from just about everywhere. So this next one, matter of fact, I'm gonna skip this one and come back to it, because I want y'all to. I want to really talk about this one. When I talk about this last one, y'all are gonna be like, "Oh snap!" So before I talk about that one, I want to talk about this one right here. Just to mention, Asanita Pharma, they're supposed to be putting up their quarter ones over the next couple of weeks, and they are also an undervalued stock. Now, for those of you who didn't know, this next one, the one that I skipped, is the one that I am highly favorable for, and you can only understand why. The WWE is a TKO holding group. World Wrestling Entertainment. Their stock overview as of April 2025, now part of the TKO Group Holdings, has delivered a remarkable performance over the past year, capturing strong investor interest and achieving record highs. So I just want you guys to see this real quick. WWE stock, and I want to put it in there like I want to make sure that y'all know because there was some discussion on social media about John Cena's retirement related to who bought the company and how WWE's title, the one that was affiliated with the original WWE, is leaving with John Cena's retirement, and the current World Heavyweight Championship that's with the next generation of WWE superstars is going to stay on the table, where they're going to pass title belts around and other such ridiculousness. But the fact is that it's a huge debate that I personally have never gotten myself involved in, because I've never took the time to do the behind the scenes discussions of what happens on like one of my favorite like male soap opera shows, because that's really what the WWE is. It's not about the fights, it's about the drama. Now, the WWE stock TKO has reached an all-time high of $174.56 in February of 2025, nearly doubling in value over the past year, up 99.78%, with a market capitalization approaching $30 billion. As of late April of 2025, the stock is trading in the $143 to $150 range, with a 52-week range of $94.32 to $179.09. Now, real quick, for anybody who I've talked to you guys before about buying those WWE replica titles and memorabilia and stuff that doesn't make you any money. If you're a real fan of the WWE and you want to make some money at the same time, buy their fucking stock. Because isn't the title like $500, $500 to $800? That's like 3, 4, 5 shares. So it's like 100. I said what, 150 right now, between 143 and 150 right now. That's 3 shares for 300, 2 shares for a $300 title, 4 shares for a $500 title with taxes and shipping. You can buy 4 shares of the WWE instead of buying a WWE title belt. Then you can take the dividend distribution and buy you a WWE title belt with the profits off your WWE stocks. That's how you spend money. Now, for the full year 2024, WWE reported a revenue of $1.398 billion, reflecting significant growth. However, quarter 4 revenue declined 10%, where year over year to $298.3 million. Now, mainly due to the timing of media rights transitions for the flagship program Raw. Offsetting this, live events, sponsorships, and consumer products all saw revenue increases, not to mention the Netflix release that just recently occurred. Now, net income for quarter 4 was $47.5 million, a turnaround from a $16.1 million loss in the previous year. Now, adjusted EBITDAs for WWE in quarter 4 2024 was $114.3 million, with a margin of 38%, down from 43% the prior year, reflecting both revenue shifts and cost management efforts post TKO merger. So when the WWE merged with the TKO, and a lot of people don't pay attention to the fact that the WWE has done quite a few merges. ECW, WCW, now they got TKO. And regardless of whose name is on the books, the WWE name is on the television, and the fact is that they're making money, make money for them so that they can keep the doors open. Analysts have set price targets for the WWE stock to range from $115 to $200, with Goldman and Sachs stating it at $165, buy it, and Guanaheim at $170, citing robust earnings and EBITDA forecast for 2025 and 2026. So some technology models predict a short-term dip to around $97.84 by May, which means that you should probably start buying it in May, because that's probably going to be the lowest side of that particular stock. But it's still going to remain positive. Now, the stock is considered to be in overbought territory after its rapid rise, with the fear and greed index at 39, which is fearful. People are afraid that the stock is going to plummet. And technical indicators showing neutral sentiment on that, where volatility has been moderate, with 47% green days in the past month. WWE's expansion of live events, sponsorships, and global media partnerships continues to drive revenue, where the company's integration into TKO Group Holdings with UFC has allowed for cost efficiency and cross promotional opportunities, which is another reason why you're starting to see a lot of those UFC fighters debuting on WWE, because there's a financial interest in there. I should have seen how much money did Travis Scott invest into the WWE, because for his raggedy butt to be up there on the channel, make a thing, bro. I still challenge Travis Scott for his hardcore title. Like I'm talking about tables, ladders, and chairs. Flaming tables, ladders, and chairs. I'm talking hardcore style. The near-term risks include fluctuations in media rights revenue due to programming transitions and potential overvaluation after the recent surge. Now, market cap stands at 12.17 billion as of April of 2025, with a trailing 12-month revenue of 2.8 billion and EBITDA of 1.2 billion. The P&E is currently negative due to accounting adjustments, but the company remains profitable on the adjusted basis. And robbing Peter to pay Paul. Now, WWE is paying a modest dividend of 38 cents per share, which is yielded at 0.25%. So for those of you that are looking for high returns on your investment, if you're getting 0.25% from the WWE versus 22% from some of the stocks that I provided to you guys a couple of weeks ago, you're probably going to make less money investing in the WWE. But if you put enough money into the WWE, they might give you a few perks that might make you feel better about it. Now, WWE stock is now trading on the NYSE as TKO, and they're paying those dividends quarterly. So if you give them money, they're going to give you back some money, just not as much as some of the other places that I recommend. Historically, WWE consistently paid a regular quarterly dividend, most recently at 12 cents per share, a lot like Orchid Island, that was also doing 12 cents per share, but they were doing 12 cents per share monthly instead of quarterly, and they're also valued at $6.50 right now instead of $150, which means you could probably buy 20, 30, 50 shares of Orchid Island for the same $150 that you'll be buying one share of WWE stock. Now, this 12 cents a share was intact until the merger with UFC in 2023. And following the merger with TKO Group's holdings, they declared the inaugural quarterly cash dividend of 38 cents per share that was just recently paid March 31st of 2025 to shareholders of record as of March 14th. So if you were on the books on the 14th, on the 31st, you got paid. That means that if you're on the books by about the 12th of July, no, by the 12th of June, because April would be the month one of quarter two. So if you're on the books by the 10th or the 12th of June, which would be month three of quarter two, by March or not March, by June 30th or 31st, you should be seeing your payout of WWE stock. Now, what does that mean? Well, remember I told you guys before that if some people invest in a stock right before the ex-dividend date and then pull out of that stock and then put their money somewhere else, this is what I would refer to. If you have to have your money on the books on a certain day so that you can get your collection, if you're entitled to revenue received without actually having to be on the books on the 31st, you could buy in on the 14th and then sell on the 15th and get your money on the 31st. But you got to double check and make sure that they don't require you to still be a shareholder on the payout day to make sure that you don't lose out on money by selling after the ex-dividend date. But if you're on the books on the ex-dividend date, you're guaranteed to get paid if you're definitely still on the books on the 31st. Now, if you're going to buy in on March 12th, ride the wave until March 31st, get your money from WWE, then sell the stock and go somewhere else. You can do that. You can do that, get your pennies and then slide. It's up to you. But this confirms the continuation of a quarterly dividend scheduler under the TKO structure. So WWE stock has experienced exceptional growth dividend by strategic expansion and strong live events and sponsorships revenue and positive analysis outlooks. So, Habex, I'm looking at Plantaric Technology. It doesn't have a dividend yield. Oh, okay, I got you. Just a second. I wrote down a dividend yield. I got to go all the way back up to the top. Back up to the first time I talked about it, because that's the second time I talked about it. Just a second, guys. You're looking for that dividend yield. No worries. You're using Google Finance. I do not use Google Finance. Not everything is findable on Google anymore. It is ironically, it's crazy, especially after Google got sued for being a conglomerate. Now the information distribution is starting to be shared amongst a lot of places. So let's see. Let's go back up. Oh, that was in my top 7 list. That's why. So I was at the top of the hour, top of the first hour. All right. Where is? See, now I would need to type into my, because I was talking about it earlier, and then also I think I scrolled past it. So there's grabs, pharmaceuticals, and you were looking for Plantar. Oh yeah, that's the tech that we were talking about. This is TGV, Traverse Therapeutics, Target, Accio Biotech, Aclim Technology, Alaheim, Lithium Holdings. Gosh. Let's see. No worries, we're gonna find it. Tesla. Did I pass it? Couldn't have. All right, we're probably gonna have to grab it a second time then. And let's see, you were looking for the dividend yields. All right, so I'm gonna grab that for you. He said, "You Yahoo." I don't do Yahoo either. He said, "Yahoo." I don't do Yahoo either. I don't do Yahoo either. All right, so here we go. We're looking for dividend yields for April 2025 and ex-dividend dates. Let's do past ex-dividend dates unless they have not past and present ex-dividend dates, and then share price and dividends, dividend payout. All right. Ask and you shall receive. Wow. That's why they're not showing it. So they have maintained a 0% dividend yield since its public listing and has not announced any plans to initiate dividends. So this is going to be considered a non-cash stock. Let me see if I can get any more information on this for you. Let's see, because they do not do payouts, they have a 0% rating. They have no ex-dividend dates because they do not pay. However, you have seen a few share price changes, which you're going to enjoy those. And that should help you understand the stock. So there's going to be some stocks that do exist that are not cash dividend stocks. And we talked about those before. Those are the ones where the value of the shares that you own is the cash value that you can leverage in a cash loan that I talked to you guys about before. And if you diversify your portfolio with cash paying stocks as well, then you will be able to have a high value of shares with enough capital being paid back to you to utilize that capital to pay against a cash loan. Probably the best place to put your money if you're looking for if you're looking for a place to sit your cash and it increase in value faster than sitting at a bank. That's what stocks and bonds is for. But you want to find the ones with the highest valuation, the highest increase of share values. So when I was giving you percentages, I was giving you percentages of increased value. I was not giving you percentages of dividends versus purchase price. As I said before, I always find you guys whatever you're looking for to the best of my ability. This is one of those companies that we were talking about earlier this year, though, and we were also talking about quite a few that were involved in plastic. So I recommend that you guys take a look at those. But yeah, again, I don't use Google for a lot of these things because Google has so many. You're welcome. It's fine. Google has so many ads now, and it's not just like actual advertisement. It is individuals who have paid Google money to have their website or product as one of the top 10 listings. So if you Google search certain things, you will be first shown, the first half of the page is sponsored listings, which doesn't necessarily answer your question. Then you might get some that answer your question. And that doesn't always help when you're looking for a nearly direct answer. But I can tell you that when I do some research, I definitely put my efforts into platforms like Perplexity, because they definitely help with getting a lot of information in a short period of time. And it definitely does a good job of organizing that information in ways where you would not be able to find it like that anywhere else. Like, for example, let's see, give you this glimpse of what my research would look like if I was looking something up real quick. There it is. So as you can see, you've got a lot of different companies up here. You've got their Q1 fiscal years. You have the analysis census that's determining whether you should buy it, sell it, hold it, the year price targets, the key drivers. This is a straight diagram of what we would be looking for if I was trying to pick through some of these topics. And as it's still saying that nvidia is one of the ones that we should put our cash towards. So, hold on now. It was supposed to be sharing the screen. Oh. I could have sworn we were doing share screen. I'm gonna try this again. We were supposed to be doing share screen. Did it share screen this time? There it is. All right. So this is what I was showing you guys. Let me make myself disappear. X dividend dates. I also look for dividend distributions. I also pay attention to how much it costs to buy the stock versus how much I'm going to make off of the stock when the stock pays. Starting out as beginners, I do want to give you guys more stocks that cost less than 20 bucks a share. If I can find a lot of them that cost less than $10 a share, so that you guys can put a lot more money up there to get an even more return. Because if you're getting back 12 to 50 cents a share off of $10 or less per share, you're making more money off of $100 than what you would if you're getting 38 cents a share for 150 bucks. So, but I also understand that it's not just startup investors that come to the show. So I want to make sure that I give you guys other areas of investment opportunities, because I believe that you guys would be able to decipher if and when you're going to invest in certain things. And then you might just start following it. Even if you don't invest in it, you might actually start following it to be able to tiptoe your way into potentially investing in it in the future. So that's one of the things that I like to do, is I like to give you guys more options. So since the WWE stock has experienced that exceptional growth with their valuations, investors should monitor the upcoming earnings and media rights developments, as well as the overall market sentiment, before making commitments towards investing in that particular stock. But Donald Trump invested into it when it was back when it wasn't worth that much, and now it's worth a ton. So if it gained $100 for every $50 that he put on it, he got a lot out of that. And actually, I'm curious to see what Travis Scott invested into the WWE for him to be on the show, because I can't say that Travis is on the show because he's good at what he does. But Speed was on the show too. So, they're starting to put a lot of podcasters on there, influencers that have like 1 million fans or more. They're starting to put those people on there as well. So never know. But I mean, like, Speed was in the Royal Rumble. I don't know what he did to get into the Royal Rumble, because that's not something that I've ever seen the WWE do, is just throw a random fan into the Royal Rumble. But they do random celebrity markups. So I was interested in seeing that. Now, the market is moving fast in April. And this is going to be brimming with both risks and opportunities for everybody, with the volatility in all countries all over the place. So whether you're parking cash in a high yield savings account, exploring the explosive potential of growth stocks, or hedging with gold, now is the time to take some actions. So after everything we learned today, are you guys ready to take your portfolio to the next level? Don't worry, Bayside, because I know what you're thinking. You're like, man, he has got to bring us some more stocks that are like low cost, high return. And that is going to be the next thing up for grabs, is some low cost, high returns. But I want to make sure that I'm not feeding you the exact same stocks on a regular basis. I want to give you some different types of stocks that you guys can look at, ETFs and other such investment opportunities, because the more things that you can take, you want to do a cost assessment, but you want to be able to say, okay, well, things like, for example, the WWE doesn't pay a lot, but if you park your money there, it's going to have a guaranteed increase over time. Whereas we're in a dip with real estate, WWE doesn't dip with the real estate. WWE doesn't dip with inflation. Their ticket prices aren't impacted. The employees fly themselves all over the place, not the company. Okay, so when you think about stuff like that, you're thinking, well, while I can buy into certain stocks and those stocks while they're down can go up and then get me some money, I also can leverage a lot of my capital in a stock that will not go down so that it will continue to grow, which keeps you with the gaining of capital. So it just depends on what type of structure you're trying to go into. Are you trying to go into something that's going to be short, quick, and high rewards? Or are you going to do like the long game and deal with exponential growth over an extended period of time? Either way, no matter how you do it, you want to make sure that you have some that have high value, and you want to have some that have high return. And between the high value and the high return, as I said before, you're able to utilize the high value to get cash loans and then use the high return to pay off those cash loans. The cash loans end up being a tax blanket, because if dividends from the stocks is paying on the loan, then you didn't make a profit. You still bought what you wanted to buy, but it technically didn't come out of your pocket because it came from dividends. Now, this method only functions when all of your bills are paid and this transaction occurs. So say your standard of living is between $2,000 to $5,000 a month, and you have an extra $1,000 a month that you can utilize to pay the note on a cash loan for a $50,000 or $100,000 car, or a $200,000, $500,000, $700,000 house. Then you can buy that item cash up front with the cash loan, and then pay off all your bills with the stock options, take the change from the stock option and put it on the cash loan. You're looking at ideally almost no profit to be claimed there, realizing no capital gains. So what we want to try to do is slowly but surely build our portfolio. But the 6 stocks that I gave you 2 or 3 weeks ago are the highest paying monthly or quarterly cash stocks that are in existence right now, with the lowest cost to buy in. So outside of the top 7 or top 10 that I gave you, they're not going to be much cheaper than that. From those, they're going to cost more, and they might have a better dividend distribution. But I mean, if you're getting a $500 stock that's paying you $15 back, I mean, it's still, in comparison to how much you got to pay to get the stock, it's still not doing what you wanted to do. Now, the upside is, though, if you're looking at ETF investments, you can try to find ETF investments related to the same type of stocks that might actually give you some type of dividend distribution, but that's not guaranteed. And depending on which platforms support which stock options, you may not even find the stock that you're looking for on certain platforms that you're using. You may have to go to a different platform. We also have to understand that day traders buy and sell actual shares of the thing using options, calls and put options, instead of simply putting the value of their capital towards the percentage of stocks using fintech trading platforms like Stash or Acorn. So there's a lot of different ways that you can go about doing this, because you can utilize TD Ameritrade to make your trades as well. It just really depends on what you're trying to accomplish and how you plan on accomplishing it. I strongly recommend that you gauge before you do anything how much you're willing to lose versus how much you're expecting to gain. You want to make sure that you're getting back more than what you're putting in, or that it will break even before you take a total loss. As long as you're paying attention to this, you'll be able to make sure that you're making the most successful trades that you can possibly make. Now, understandably, You get your money when you get your money. You don't always get it before ex-dividend dates. You might have to execute buying in after an ex-dividend date, which means that you're going to get a payout after the next ex-dividend date. That does happen. Don't be discouraged. You buy in when you can buy in. If you start making a list of the stocks that you want to have, the ex-dividend dates of those stocks, if those stocks pay dividends, because not all stocks pay dividends, and then you plan when you're going to do these things, you would be able to put your money into the stocks, get your ex-dividend, and then use your ex-dividend or get your dividends from the ex-dividend date and use that to pay for something else. But you've got to budget it, because you know that it's going to take a couple days to get the money. It's going to take a couple days to put the money into your account. So you might need an extra week between the day you put your money up and the day you get the money back. Regardless of the fact, if you plan it correctly, you would be able to find yourself in a financial investment roller coaster where you're investing when you need to invest, paying all your bills when you need to pay all your bills. Nothing's going undone, but all of your income is basically walking right into your stock investments. And this is another reason why individuals say pay the majority of your bills with your credit cards, but don't spend money on your credit cards that you don't have cash to pay for. If you pay your rent early and then take the rest of your bills and put it on your credit card, you just got to get your ex-dividend payment before the credit card date. And then you could take that money and pay your credit card from the profit, where now you're putting your principal up. You're taking the money for your light bill, putting it in a stock option, getting paid the money for your light bill, and then paying your light bill. So that money is going to come to you every month now, but you've got to balance it correctly. My recommendation is to make sure that you're getting paid back more than what you need before you start redirecting your capital directly to the stock option. But as you build it up, you're going to see larger distributions every month, and especially on certain months out of the quarter, because depending on if all of your quarterlies are on the same month or if your quarterlies offset, will depend on whether or not you're going to have the lower months from the monthly distributions and the higher months from the quarterly and monthly distributions on the same month. Because like most of the stocks I talked to you about this month paid in March. Pretty much all of them were supposed to pay in March, which means that some of them are going to pay in April, but the ones that paid in March that are quarterly aren't going to pay again until June. So if I've got a lot of quarterlies that roll over on June, then that means I'm probably not going to see but one higher month every 3 months, and the rest of the months are going to be average. So with that being said, make sure that you guys drop your thoughts in the comment sections. Also, remember to subscribe and always utilize those reaction buttons if at all possible. And definitely, we're going to be giving you some more expert tips. I'm going to be finding some more information for you guys on some more stuff that we can invest in. I will double back and see if there are any reasonably close to the ones that I gave you guys before, so that if you're trying to get a portfolio of like 14 or 20 of the lowest costing stocks with the highest payouts, I'm going to try to grab that for you so that we can double check that. If there aren't a lot, I'll just throw them into tomorrow's show when we're talking about another country. So make sure that you follow us tomorrow and don't miss out on the next deep dive into what's driving the markets, because as I break down the best investment opportunities for the month of May, we're going to be sharing actionable strategies and highlighting the stocks and sectors that could define the upcoming month's market. And that's clearly important. Let's seize the moments and make April 2025 some of the most successful months that we're going to have. And don't miss those upcoming deep dives into the market predictions, because we want to navigate the ups and downs together and also seize the opportunities that May of 2025 has to offer as well. That is all the information that I do have for you guys for today. I greatly appreciate you guys riding the wave with us. There was a lot, and I ironically covered it in a shorter period of time than I had thought. I was concerned that I was not going to finish this in 3 hours because I was like 75 pages. I'm like, oh God, but we muscled through it. So I greatly appreciate that. With that being said, special shout out to Ruderus, Bayside, Mr. Satellite, Danny Steffen, Red Void. Appreciate you guys for watching us on Twitter, and thank you guys for watching us on Twitch as well. I'm going to say, ladies, as long as the situation doesn't make sense, I'm going to ask you ladies to make it make sense. So ladies, please make it make sense. And fellas, we are right at 72% right now. We actually have about 70% of our following is between 25 and 45 years old. So we are in the just about middle-aged group. So it has, ironically, it has funneled into a specialization. I'm actually pretty impressed by that. Yet and still, we are about 72% male following. This is a male-driven podcast from a male's perspective, where women can come and learn what men think, how men feel, what men believe, and also how to make some money on the side, because everything that men can do, women can do better, since they're not distracted by lust. Therefore, you might have not seen a bunch of millionaire females that didn't get their money outside of divorce back in the day, but if they stick to this podcast, y'all are going to find it hard to be men in a country full of women that are multi-millionaires because they came to this channel and did what I said do. I'm just trying to let y'all know. So y'all ain't started investing, I'm gonna remind you one more again that y'all need to go ahead and go start putting your money somewhere other than entertainment, because GTA 6 can come out and you can get the membership and you could be throwing away $200-$300 a month on video games, or you could be investing $200-$400 a month on the future. Then you could take the interest off of your investment and go get them same dang video games. The difference between the two is that the second option, you don't got to re-earn that money. That money's just going to keep coming to you. The first option, once the money is spent, you got to go back out and go get it again. I have much respect for go-getters, but once the go-getting has been gotten, I don't want to get up and go get nothing else. There comes a time in our life where it is time to stop. And as we get closer to that age, I want to be able to stop. Now, granted, I don't see myself laying in bed all day long doing absolutely nothing. I will find a way to be productive, even if my productivity leads me to nothing more than this podcast and finding other ways to make money for us. It's not going to change the fact, though, is that I'm going to be living a stress-free life where I am coming because I feel like it, not because I have to. I get up and work because I feel like it, not because I have to. I leave my house because I feel, you know how much less stressful that kind of lifestyle is to do things because you want to, not because you have to. I just really want to put that out there. So since we're working our way to that type of success, let's just stick with it. I might even throw in tomorrow, because Bayside asked me yesterday about some movie picks. I might even throw in tomorrow 5 good movie picks, because if I don't do it tomorrow, I'm definitely going to do it on Thursday, because I did say that by Thursday I'll have you a few, and we'll add that into the back of the show, towards the bottom end of the show. That way you can get some recommendations on some things to look at, because I know there's a lot of stuff out there. There's a lot of stuff out there. I've actually been following on K-dramas and international movies, because I pretty much covered most horror, thriller, and the horror, the thriller, and the action genres, and all of the anime genres. So that's like I basically covered 80% of Netflix. So there isn't much left besides new releases. So a lot of the times I find myself rewatching stuff that I've already seen before, because there isn't anything else there worth looking at, because I've covered pretty much the whole platform. So as some stuff comes up, I start looking at some, because I like mind benders. I like the ones that are that make you think. I always like doing things that make you think. I like crunching numbers, and I like analyzing and assuming, and predictions, hypotheses, formulating theories, because as long as you're doing that, your brain is working. As long as your brain is working, you're still alive. So I'm going to make sure that I'm always trying to find another way to get things going. And then after that, it is what it is. So again, I'm going to let you guys know, I really appreciate you guys coming to the show. Tomorrow, we're going to be starting around about the same time. We're supposed to tee things off at about 10 o'clock, sometimes about 10:15, 10:30, which is about between 11 and 11:30 Eastern Standard Time, which is also about 7 to 7:30 California time. And for those of you that are on the east side of the country, it's between 4 and 4:30 in the morning when we kick things off, Green Minutes time and Universal Standard Time. So whatever you're doing tomorrow, about 2 hours ago, be here at the same time. Do like Bayside. Have it playing in the background while you're doing other stuff. Because you can always put something down and come to the show and start asking questions and learn some more stuff the same way Bayside did today. And you'll be able to find yourself learning new things along the way. Because the information that I just provided here, that was ironically not in Google. Special shout out to Twitch, as y'all see that message is from the Twitch platform. So if you can't find it, come ask me about it. I'll find it. If it exists, I'll tell you everything you need to know about it. With that being said, I want to thank you guys for coming to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. Any comments that go into the comment section during the outro, as long as they're appropriate, they'll end up on the screen. Thank you guys again. I'll see you guys tomorrow night.
Chase validation, now I validate myself. Building inner strength, putting doubt upon the shelf. No more unnecessary drama, no more wasted time. Climbing higher, constantly making my own climb. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. Living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never just